Thank you for staying tuned. The Monetary Policy Committee has commenced its rate-setting meeting today. The meeting, which will last till tomorrow, is the first in the new year. Market analysts expect the committee to keep rates unchanged. And what are the considerations and policy options for the committee? Temple will be having this conversation with Adedayo Bakare, macroeconomic strategist with AfriInvest Securities. Temple.
Right, thank you, Chimbaze. Like you said, we've got Adedayo Bakare here. So in the last meeting of 2018 was in November, of course, 21st and 27th, just like these two. But a lot of things kind of characterized the decisions and considerations of the MPC at that point in time. You've got global inflationary pressures, weakening crude oil prices, fragilities in the financial system, and of course a whole lot of things in the global stage. What for you will be the considerations? What will be the major factors in the global space for this MPC at this point in time, Dayo?
Okay, thanks for having me on the show. I think it's still, most of the issues we saw in November 2018,
so
they are all still intact. So the global trade tensions between US and China, since the meeting, we see that we've seen a situation where they reached an agreement in December to a 90-day ceasefire, which is going to come to an end by February, towards the end of February. So by the end of February, we have more clarity on the direction of trade between the US and China. But for now, the situation remains calm, although the existing tariff remains in place. But we see that the U.S. has stopped, further hikes in tariff. So also we think in terms of policy normalization, the European Central Bank announced in last year, December, that the quantitative easing program they've pursued for a long period now will come to an end. So they are unwinding their asset purchase program. So also that will play a very big factor in what is happening that will dictate what will happen at the MPC in this month. Tomorrow, the decision that will be made tomorrow. Also, when you think in terms of financial markets, we see that in 2018 it was very, very unstable and volatile. And what we've seen so far early this year is we've seen a bit more calm return into the markets, but we know the pressures remain, in terms of global growth projections, in terms of interest rate increases in advanced economies. So you expect that these factors will continue to influence what the CBN will decide to do tomorrow.
So from the last meeting that they had in November, would you say the decision they had at that point has shaped anything in the economy, retaining all the rates? They chose not to tighten, they chose not to loosen?
At this point, we know the Monetary Policy Committee meeting is mostly symbolic, because the MPR, for instance, which is the key benchmark interest rate in the economy, has remained unchanged since 2016. Yeah. And we've seen a situation where the CBN has instead been, tweaking its, yields in the market through its primary market auctions, its treasury bill auctions, and its OMO auctions. So, obviously, you expect that will remain, and that was what remained in, November and December. Although at the last meeting, we saw the policy committee members take on a more dovish tone, because they were concerned about, slower than expected growth. And from the numbers we saw in December, we saw that growth was still lackluster at about 1.8%. Unemployment is around 23.1%, and inflation remains at double digits, still elevated. So all these things are considerations that would also guide what will happen tomorrow. But so far, we do not see any reason to change course.
So one of the, of course, there's this consensus among you analysts that the stance will be maintained, and of course all rates are across the policy rates, and of course all the parameters will be kept intact. But then some have also said that because of the fact that we will see other emerging market central banks increasing rates this year, there's likelihood for Nigeria to also increase its MPR. How come it is not going to happen at this time?
Okay, for us, we know that in terms of global, we've seen a situation where the risk environment is elevated, even globally. So the trade tensions that's happening, the financial market volatilities that we've seen. So we've seen a situation where even the Federal Reserve of the U.S., they are guiding towards lesser rate hikes in 2019. So the market is expecting about 2 rate hikes in 2019. In 2018, we had about 4. Then also, if you go to the UK, there's all this uncertainty around Brexit. So you don't expect the central bank to increase its policy rate. Then also, if you go to the ECB, although they've unwidened their asset purchase program, they are also not tweaking their monetary policy rate at current times. So when you bring it to the context of emerging markets and the Nigerian markets, we already know in Nigeria we are offering real positive returns when you adjust for risk and you adjust, in terms of your adjustments for inflation. If you look at yields in the treasury bills market, it's currently at elevated levels. It can compare favorably with what is going on in emerging markets. Don't forget, I've mentioned that the MPR at this stage is just symbolic. The market rates are significantly higher than what you have for MPR. So in terms of competitiveness relative to emerging markets, you expect the Nigerian market to remain competitive to attract foreign capital and retain foreign capital, especially after the elections.
So at the meeting before the last year, we saw some initiatives rolled out by the central bank, some kind of quantitative easing, seeming quantitative easing measures where they intend to lend to banks, from the CRR and all. But in recent times, we've seen some kind of stability in the financial market. We've seen elevated liquidity, as I said earlier. How's that also expected to shape things going forward?
The interventions we saw, I think it was in the July meeting, and we are really not optimistic about the impact of that on the economy. So the two initiatives were, one was they had the corporate bonds to purchase program, also the dynamic CRR to encourage lending to real sector, manufacturing, agriculture, and etc. In our own view, this is not the first time CBN will come to bring about a policy like that. So we saw that happen in 2015, and this is because in a situation where you expect banks to continue to bear the risk of those lending, even if you are extending at, say, you want to give concessionary lending at 9%, it's the bank carrying all the risks in their balance sheet. They are the ones going to suffer all the losses. Right. So in a situation where the risk environment is still not favorable for lending, you expect that banks might not be able to access the window the CBN is trying to give them. Also, for the corporate bonds program, purchase program, you expect that this will be granted to only A-rated companies. So we are talking about A-rated companies like Dangote, who can access the debt market already through commercial papers, who can access prime lending at, say, 16% from banks. So when you're thinking in terms of growth, who are the drivers of growth? They are the small, medium-scale businesses, and they can access this window. So we are less optimistic about the impact that will have on growth as well.
Unfortunately, we really don't have more time, but we need more time to be able to move on with this conversation. Thank you so much, Dayo Bakare, for your thoughts. Back to you, Chimaze.
Thank you, Temple. Well, talking about the debt market, let's get an update on the fixed income market. I'm being joined by the head fixed income at Access Bank, Buki Arebeshola. Good morning, Buki. Thank you very much for joining us. It's a new trading week. What are the expectations in the treasury bills and bond segment of the market this week?
So the treasury bills market opened this morning on a buying note. This is a continuation of the trend we experienced last week. We are seeing foreign investors coming back into the markets for the past few weeks. This has continued today. We've seen buying on short-tenured securities. And also in the bonds market, it's still a bit quiet. And that's because, one, we have the bid offer spread quite wide. And then secondly, the bond auction calendar has not been released by the DMO, despite the fact that auction was actually supposed to be this week. So we're seeing everything quiet on that end.
Now, has the market priced in whatever decision that the monetary policy perhaps would come out with this week?
I mean, given that we all expect parameters to be kept as they've been, so we don't see any impact from that end in the market.
All right. Thank you very much for your time, Buki. Buki Aribishola is the head fixed income at Access Bank. Well, it's on that note that we draw the curtain on today's edition of the program. Thank you very much for watching. I'm Chimezi Obi Iwago.